right, Stock Pulse back here at 2018 VRIC in Vancouver. I've got Vince Sarace, Kutcho Copper, that's KC on the venture. Vince, thanks for joining me.
Thank you.
All right, let's came across your story here, raised a bunch of money, you got some high-grade copper here, you put things together pretty fast. Why don't you talk about how you put this deal together, how much money you raised, and where you're at here?
Sure. Started a couple of years ago. We were looking for an advanced stage asset in the company. Previous to that, we did a lot of work on exploration projects, but decided we wanted to get something a little more, with some more meat on the bones, if you will. And we evaluated a lot of different projects. We came across, or the Kutcho project was brought to our attention. And the Kutcho project has been around a long time, has a history. It resided, Sherwood Copper owned the asset under the direction of Stephen Quinn. He had just put Minto into production, and Kutcho was next in line. Sherwood and Capstone merged in the late 2000s. And Capstone took a different direction. They wanted to basically move in bigger leaps and bounds, if you will. Therefore, Kutcho didn't quite fit the model in which they wanted to pursue. So essentially it became orphaned, and it sat orphaned within Capstone for a good part of 7 years or so. Capstone tried to sell the project in 2014. Nobody got to their price expectations in 2014, so they simply shelved it again. So when we identified Kutcho as a good opportunity, and the criteria in which we were looking for in a project, had to meet a few things. One, something advanced stage, something that was going to be a nice little economic deposit, if you will, but most importantly, something that we thought we could take, unlock some significant value, and grow. Something that its potential was still kind of hidden, if you will, and we saw that in Kutcho. So we went to Capstone, spring of 2017, and started talking to them and negotiated an acquisition price from them on the project. It was $28.8 million Canadian that we settled on. So over the course of the next 6 months, we had to finance this acquisition that we agreed to. And the first opportunity that came to us was putting a precious metal stream on the project, and it was opportunistic because only about 8% of the revenue of the project was coming from the silver and gold. So we approached Wheaton, and they had some previous experience with the project, but they did their due diligence, did a complete new look at it, really liked the project, so we agreed to do a precious metal purchase agreement with them on the silver and gold component, which was valued at about $65 million US, and they would advance us some money up front, which is a Wheaton model, and it's very good for us. It's non-dilutive capital that comes up front to help us build out our feasibility study. As we went down the path to finance the balance of the acquisition, Wheaton actually stepped up and did another $20 million convertible note with us. In addition to that, they did $4 million into an equity raise that we did. So Wheaton basically stepped up with $33 million in total towards the acquisition and development of the project moving forward. We had to raise a balance of funds, something in the tune of $7 to $10 million on top of what Wheaton had provided us, and we closed all that in December, I think it was December 22nd-ish, or just before Christmas. We closed the acquisition, the financing, and stock came back to trade around that date. So moving forward, what we see as the biggest opportunity with the project is, and this was what I said about unlocking the value, what we identified very quickly was the ability for this project to scale. So at its current size, 10.5 million tons, grading 2% copper and about just under 3% copper equivalent, it's primarily copper and zinc. It yielded economics of $265 million after-tax NPV, almost a 28% IRR, and a modest CapEx, $220 million. So nice economic deposit that it sits. But the opportunity here, and what we see the opportunity is to, and our goal is to double the size of this project. And think we can do this in a very low-risk manner. We identified one specific opportunity where Capstone had used a 1.5% copper cutoff grade. And in doing a proper NSR cutoff, we identified that we could drop the cutoff grade down to 1%. That opened up the main zone in particular. We are able to add 50% to the existing M&I resources simply by lowering the cutoff grade, which is simply a revision of the mine plan coming into the pre-feas. So that in itself added significant value. And then by lowering that cutoff grade, a third lens, which was currently kind of out of play, comes into play. So essentially, in those two scenarios, we think we can pretty much double the size of the project, which has not been reflected in the current project economics or what we're trading at kind of in the market right now. And that'll all come to fruition this year. This field season, essentially over the 12 months, starting now, we basically will be completing a 30,000 meter drill program to drill out the inferred resources. We will be conducting all the requirements for permitting that feed into the feasibility study that we're aiming to complete in the Q1, Q2 of 2019. So ultimately, it's completing the feasibility study, it's submitting for permit, and we're hoping to get a positive development decision or construction decision in about 30 months from now. So we'll be hitting it pretty hard and moving pretty quick on this project.
Yeah, wow. So a lot of news flow coming here. So yeah, busy year planned out. What's the best way to follow you guys?
Best way to follow us is take a look at, we can go to our website at www.kutchocopper.ca, and our ticker symbol is KC on the TSXV.
There you have it. Vince Sirace, President and CEO, Kutcho Copper. Appreciate your time.
Thank you.